Hi there everyone, good morning and welcome to Market Fatafat. The D Street jitters very evident right now as we're clearly piggybacking on the global sell-off that we witnessed overnight. We breached 10,100 intraday and we're trading close to the April lows as the sell-off has intensified, with Reliance Industries, by the way, breaching the 200 daily moving average for the first time in over a year. Well, whole host of stocks coming your way. Let's bring on board our team of research analysts who are all standing by. Kunal Bothra and Mandar Jamsandekar with us on technicals. Well, let's start off then. Lots of results to chat about. We'll begin with Wipro Mubina and talk a little bit about what really affected the quarter, what the management had to say, and what the brokerage verdict is.
Well, it looks like a very inline set of numbers for Wipro. Margins and PAT, however, were hit by the $75 million lawsuit settlement that Wipro had to undergo in the quarter gone by. The guidance was modest and in line with expectations. The brokerage community mostly has maintained a neutral stance, with one underweight stance coming in from one of the brokerages. So they're also just about okay, with the kind of numbers Wipro has posted. Again, like I said, growth in line with expectations, but margins and profits did come in below expectations. Nevertheless, you are seeing some support coming by in Wipro stock price today.
All right, yes, that stock is managing to buck the general trend and holding out quite smartly in the green. Moving right on to a mid-cap name, and why is Bata India, Kunal, on your radar today?
So today the stock is one of the better performers in terms of price gains on the F&O side. Also looking at the prospects over the last 2 weeks, the stock has bounced off from its 200 moving average. But there was this bearish head and shoulder pattern getting formed for Bata India, and the stock is just about trading above that neckline of head and shoulder pattern. I believe if this 920 trend line for Bata India does not get breached, the stock could retest its previous swing lows. So I think a short-term trader should take positions. If the stock doesn't break 920, then create fresh short positions on Bata India.
Right, that's the view coming in. The stock bouncing off quite smartly from the 200 DMA. Meantime, Karanya, let's also chat a little bit about the result candidate Maruti. What's the street going in with?
The street is not going in with a very good set of expectations, Avan. Maruti has been witnessing continued pressure for the last couple of months because of volumes. And do remember, the quarter gone by, we've seen a degrowth for volumes. There's been a mild 1.5% degrowth. On back of that, revenue is likely to be muted. We're expecting a good 250 basis points odd margin compression as well, coming in at 14.4%. Do remember, rise in commodity costs has definitely been a problem, been a factor that's been ailing OEMs, but apart from that, the benefits of a favorable product mix is likely to be offset because of the heavy discounts that they've been doling out in their key models, and also because of the currency depreciation, not only versus the dollar but also versus the Japanese yen.
Alright, watch out for Maruti. Prior to its numbers, the stock is under quite a bit of pressure. A lot of analysts have been on the street have been talking about 10,000 as a target, but remember, we've seen quite a hefty sell-off. Well, then there's Yes Bank, and all eyes on this candidate yet again. We're expecting numbers today. Profits seen higher by 24%. 1245 crores is what we're working with as per the ET Now polls. NII seen at 2,366 crore rupees, up 25%. The NIMs could dip sequentially. Asset quality may rise a little bit, and deposit growth is seen in the range of 40 to 41%. But we'll be watching out for management commentary, more importantly, on the succession plan post the RBI cutting the tenure of Rana Kapoor as well as their capital raising plans. 203 on the stock. Moving right on then, it's SEAT, which is on the radar as well, and currently struggling in trade, looking to breach that level of 1,000 on the downside perhaps, Siddharth.
Well, yes, and Avan, it's not just auto, even auto ancillary names are suffering, be it SEAT or Motherson Sumi, which we spoke earlier. 25 months low for a stock, that says all that what kind of pressure the stock has been in. And today too, we are seeing, despite at 25 months low, SEAT is adding a lot of short positions, and these short positions are getting rolled over too. The stock may remain subdued for some more time to come.
All right, that's the stock hitting a 25-month low, SEAT in focus. Meantime, Mandar, let's get in your technical expertise. MCX, do you believe that the stock will continue to remain in a range and under pressure?
Yeah, good morning, Avan. Rightly said. See, for the last 10 months, the stock has not done much. It's trading in a range. 900 has been a resistance, 650 has been a support. Today also in the intraday trade, the stock is down by 14%. So there is clear weakness in the stock. I think the stock will continue to trade in this range going forward.
All right, keep an eye out on MCX, down 14% nearly in the single trading day. Meantime, Mubina, there's L&T Info as well. What kind of a quarter has it been for the company?
Well, not a bad quarter. Revenues were higher by about 8.1%. Profits were higher by 10% on a sequential basis. And you know, with tech companies really being able to deliver mid-single-digit growth, this one has been able to do pretty well. Margins have come in at 20.5% versus 19.4%. Macquarie is maintaining an outperform stance with a target at 2,210 rupees per share. That's about a 400 rupee upside from the current level. They believe that the revenue momentum will remain strong for the balance of FY19 itself. The stock price had started off with very smart gains at the beginning, but subsequently has lost out a lot of steam along with the rest of the markets.
All right, there you have it. That's the take coming in on L&T Info. Moving right on then, it's Bajaj Auto. And clearly the street is reeling post that margin disappointment, Karanya.
In fact, right now I cannot really say the stock is under pressure. It has recovered a fair bit from the day's low point. But yes, Bajaj did, in fact, crack in trade earlier on in the session. It's the second day of losses. This is primarily fueled by a disappointing set of numbers, especially on the margins front. Revenue and profits were in line, but margins have come in at a level which was last seen probably in 2010. So clearly on back of that, the markets are punishing the stock since yesterday. Of course, the City has also come out with a note having a sell stance with a target of 2,500. They said that there's still no clarity about how the management is planning to go ahead and as far as the strategy goes, whether they want to keep the pricing war going, or will they be, will they try to normalize the margins going forward?
All right, yes indeed, the stock has recovered quite substantially, now quoting at 24.74. Meantime, it's Indiabulls Real Estate as well that's in focus, and this is after it came out with its earnings yesterday post-market hours. The top line growth quite steady, I'd have to say, at 1,040 crore rupees, and managed to grow quite substantially. You have the profits which came in higher by about 20% this time around, clocked in at 75.9 crores versus 63.2 crore rupees. And the EBITDA, that's been a bit disappointing, just about flat, lower by 4% at 242 crore rupees. There you have it, that's the take on IBREL, down 5% nearly. Meantime, M&M Finance, what exactly are we observing in this one? It has managed to buck the trend quite significantly and substantially, Siddharth.
One, we discussed the stock in Fatavat segment yesterday also, and we were talking about that, how the stock is trying to breach that downward trend line, and it has breached decisively in last two trading sessions, including today's. An important point is that this is not happening because of short covering, this is happening because of formation of long position. Even if you look at the cash volumes, they're substantially high, even on the even if you factor in the expiry. So all in all, this seemed to be more of formation of long positions and cash buying, which is taking M&M Financial higher, which is not the case with most of the NBFCs.
Okay, watch out for M&M Finance yet again on the radar today on Market Fatafat. But let's keep it with as many stocks as we can and pull up Motherson Sumi, pardon me. And the selling pressure is just really continuous and relentless, Kunal. Where is it that you're seeing it abate at some level?
So there are some support levels very close to the price where it's trading. I think 220 to 225 is a very strong support zone for Motherson Sumi. But the more interesting part is that whenever the stock has tried to retest its previous swing lows, it's resulting to a rally for the stock price, and only after a certain period of time of consolidation has the stock managed to breach its previous swing low. So I believe if this pattern repeats, this support of 220 to 225 for Motherson Sumi should hold. I think as a contra buyer, traders could look at a buy even at current levels for a target closer to 260 to 65 on Motherson Sumi.
I keep an eye out. That's the word coming in on Motherson Sumi, 5% off. Meantime, let's talk a little bit about SKF, Mubina, in terms of the performance as well as the buyback news.
Well, it's a stock we don't talk about very often for the simple reason that, well, volumes are very low on this one. But today we are seeing buying action coming in. Two reasons. Firstly, the numbers have been pretty good. A top line growth of 12.7% profit have jumped from 74 crores to 84.3 crores. So it's indicating a growth of 14%, outpacing the top line growth. But the other big trigger, and I suppose the bigger trigger, would be the fact that the board has approved a buyback proposal. We're talking about a price point of 2,100 rupees. That's close to 350 rupees higher from the current levels. It's a total buyback of 400 odd crore rupees. So it's 19 lakh shares approximately that the company has proposed buying back. And that's one of the key triggers for the stock rising higher today.
Oh yes, indeed it is. So that's why we're flagging it off. That's SKF India. Meantime, let's talk about Bharat Financial, and I think all round a good. Okay, just want to take a moment to address some numbers that are flashing at the bottom of your screens. And BHEL has come out with its numbers. We're just waiting for a little more clarity until we get it on the stock exchanges. But for now, it's been a profit figure at 185 crore rupees. Remember, we're working with expectations of about 218 crore rupees. But by and large, there's been lower provisions this quarter. The executable backlog as well has increased, which is why the street was working with a fairly healthy set of earnings this time around. Remember, when it comes to financials, it's not been the best set of numbers for BHEL. In fact, last year, it was an EBITDA loss of about 95 crore rupees. So I think we'll have to wait and watch as well in terms of what they deliver on the operational front as well, because we're expecting quite a recovery there. But I think that headline number seemed to have unnerved the street. That's not the only number that we have with us at hand. The top line growth as well has come in substantially below street estimates. So on profit, it's a miss. On top line growth, it's a miss. 6,606 crore rupees, while we were working with expectations of 6,900 crore rupees. We'll have to wait and I'm going to try and dig up the segmental growth performance as well. Where have they been lagging? Where have you seen an uptick in performance? I'm just going to tell you what we're working with. The industry segment is expected to see decent growth supported by execution as well as locomotive orders. The rupee depreciation as well this time around would have affected the margins largely on account of higher raw material prices. So maybe we would see a little bit of a pressure there. Other income has come in at 151 crore rupees versus 218 crores. There we go. We have the performance on EBITDA and a big miss there as well. 362 crores is what we were factoring in via the ET Now poll, and you have the numbers which have come in fairly weak at 240 crore rupees as in terms of the EBITDA. Remember, this is versus an EBITDA loss of 95 crores last time around, and while the street was working with a fairly decent set of numbers, the company has not managed to deliver. Just going to walk you through the segmental performance as well. In terms of the power revenues this time around, it has come in at 5,153 crores. So yes, you have seen an up move versus 5,064 crores last year. The industry revenue growth as well has been strong. 1,453 crores versus about 1,100 crore rupees. So, you know, the individual segments have managed to perform, but I think that EBITDA number has been a big miss. The top line growth has not been up to the mark as well, which is why the stock price immediately after the numbers came out has dipped in the red and now struggling, down 4%. The stock is losing quite a bit of steam as we speak. We'll wait out for management commentary, orders in the pipeline, whether or not they can see a recovery, the reduction in debtors, what is the outlook for their individual segments, and what the impact is of the currency depreciation as well. I think 73 is where the stock is just about settling. Tell you what, let's take a quick break, come right back for more on Market Fatafat. This from BHEL. Let's connect with Ranjit Shivaram, analyst who joins in from ICICI Sec. And Ranjit, you know, we were expecting a fairly decent set of numbers, but the company hasn't obliged. First up, how are you looking into the EBITDA performance, which has been a big miss?
Yeah, the major observation is that the gross margin, which is which indicates the raw mat to sales, that has gone up. Raw mat to sales has gone up to 60%. So this was in this 55 to 57% range. So that we have to understand, like, is there any pricing pressure because of it, and is this trend continuing, or is it largely to do with some more imports, and because of that the raw material prices have gone up? So that is one worry looking at the headline numbers, and also that has impacted the overall margins also. So margins, we were expecting 5.3% EBITDA margin, so that has come down. And also execution also around 7% growth we were expecting. So that's also a bit lower compared to what we were expecting. So then whether there is any risk in terms of the MOU guidance, that is another thing which we'll have to look forward. So that's the overall take on the initial numbers.
So do you believe then that these pressures will continue? Are you revising your target prices then on BHEL?
Currently, we won't. We will wait till the management con call. So post which then we will take a call, because they have recently won a lot of FGD orders. So these are short cycle orders where they can ramp up the execution quickly compared to the bigger orders. So we will wait till the management con call whether they are revising their MOU guidance or the overall outlook.
Okay, other than that, what else is it that you would want to hear from the management?
Regarding order intake, like, is there any pressure in terms, because they were guiding on 8 to 10 gigawatt of order intake for this year. So given the scenario, is there any risk to that order intake guidance?
Thanks very much, Ranjit, for giving us your assessment. The stock has managed to cool off. They have received significant orders. We'll have to wait and watch about the execution, but the high raw material prices has spread havoc on the margins, on the operational performance. The top line growth has been a miss, and even profits have come in below the street expectations. That's PHEL for you at 73.7. Well, let's move right on then and get right back to Market Fatafat. Our team of research analysts are all waiting by. So let's chat another set of numbers then. In Karanya, let's touch upon Bharat Financial.
Yes, Savan, Bharat Financial did post a strong set of numbers. There's been a good profit growth led by a healthy NII. NII numbers have come in at 555 crores versus 412, which is a growth of 35% on a yearly basis. PAT has come in at almost 233 crores versus 142 crores. It has jumped 64%. The stock did open pretty okay in trade, but yes, right now under some selling pressure.
All right, that's the view coming in. The stock looking a little bit choppy at the current levels. Meantime, KPIT Tech as well as in focus, and largely on the back of earnings. They have delivered a profit growth of about 5% sequentially to come in at 82 crore rupees. The revenues have grown almost 18% on a sequential basis this time around, and it's been a rise of about 37% in their overall profits this time around. So not a bad set of numbers. The management as well saying that it's been driven by operating efficiencies despite the wage hikes, and they are looking to achieve their annual revenue guidance and exceed the annual operating margin guidance. 210 on the stock. But we're completely out of time, so we'll wrap it up right here on the show. Thanks for watching. Stay tuned for Markets at Noon.